Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's January 30th. This will be our chart lesson. And taking a look at our daily chart, you can see we had a big down day today. We actually had two measured legs down for the most part. We came off that oversold pretty quickly this time. We do have this short-term trend up, a break, and two legs up. Will we sell off this time? We'll just have to see. We may continue just to work sideways here. It wouldn't surprise me at all if we just didn't continue to work around and stay in this 3,800 to maybe 41, whatever it is up here, 41.40 or so, 41.30. That seems to be the support and the resistance, and we're liable to bounce anywhere in between there. So we'll just have to see what happens. But we are selling off here after we actually had two bigger legs and then two legs in this second leg up here. There's a leg up, correction, second leg up, and then there's two legs up in this particular leg as well. There's actually two legs up in this leg too. So just remember the market moves in twos. It tends to move in twos, and a lot of times they're measured moves. And so that's where we find these measured moves oftentimes. So, but you can see fairly bearish day, closed pretty close to the low. And so we'll see if we get any follow through selling tomorrow. It wouldn't surprise me at all if we don't at least come back to this midline here. This is a midline on the envelope bands here. Um, and you can see we came out of the oversold. Anything above this purple is pretty much starting to get overbought, or not oversold, overbought. I sometimes say things and I get them backwards, and most of the time, hopefully, I'll catch it, but sometimes I don't, and I know it confuses people. I had a conversation with somebody today. I think I called a failure reversal, and I don't even want to talk about those anyway because they just confuse people. But I called a failure reversal, and this guy's all confused, and I just called it the wrong thing basically. So sometimes I slip up and do that and I don't catch it. Hopefully, I'll catch it, but sometimes I don't. So, but there it is. Big bearish day down. We were overbought up here, not oversold. I think I said oversold a couple of times, but we're overbought. Oversold would be down in this area. But this is overbought, and it means we'll probably get a correction once you start to get up in the air. I mean, it could be overbought for longer than you think it can, but generally you'll correct out of there pretty quickly. Uh, Not always, but most of the time you will. So we'll see what happens tomorrow. We'll see if we get some follow through selling. But right now the market looks starting off on a bearish tone for a Monday. So, and looking at the big picture, I still think we're going to make another leg down. I mean, if you go back and look, this is the first time we've gotten outside this trend line on this entire contract. And this little break over those last few days there is the first time we've gotten outside that. And generally that's going to lead to a retest of the lows. Maybe there's an overshoot down here. Somebody else sent me their chart and they drew it similar to this and said, hey, maybe we got an overshoot here. It's possible, but generally when you get an overshoot here on this correction, you're going to get a break of your trend line here. And I don't see that. I don't even see one here. We went outside of it, but it's still closed inside both times. So to me, it doesn't look like an overshoot. It's possible. I'm not saying it's not, but it doesn't really act or look like one. And so, does it fit okay there? Yeah. I mean, you could make an argue for it, but it doesn't fit perfectly on the midline there either. Yeah, in some places it fits, but you don't get that overshoot like you would expect. And then if you come down here, it fits like you can see it fitting in there quite a few times. So it looks like it fits there. It doesn't, not perfect every time, but it looks more, I think it looks more accurate more times than the other direction. So I'm not saying the other person's chart is wrong, but it doesn't look like an overshoot to me. So anyway, doesn't mean that it's not, but it doesn't look like one to me. It's not a typical overshoot. So there it is, very bearish day. We'll see if we get any follow through selling tomorrow, and that'll kind of tell the tale where we're going. Most likely the path of least resistance would be down off this overbought territory up here. So we'll see what happens. But let's flip over to our 2000 tick chart, go through the trades, look at that trade, that chart. You can see the 2 legs down. There's like 4 legs down, but there's 2 main legs, and then in the second leg down, there's 2 down legs in that leg. But I'll show it to you on the other chart. Okay, and here's the big picture. Yeah, early on it looked like it might be a range, but it's not. It's clearly, you got your first leg down, then a fairly large correction, and then you made your second leg down, and you can see the target down here. We went just slightly further, but as well as being a second leg down, there's a leg down correction, and then another leg down within that correction. And somebody asked me, well, how do you find these corrections? Generally, this first leg, wherever your correction ends, that's where your second leg will start. Same thing here. You had your move down, you had your first leg, and then it corrected up here, so that's where your second leg would start. And sometimes the legs will be real clear like this, and sometimes they'll be real choppy like this. Generally, the first leg will be real clear, and then the second leg might be choppier, or the first leg might be choppier, and the second leg's real clear. So you don't usually get 2 real easy to spot legs, although sometimes you do. So, but for the most part, it'll look like this. You'll get this real strong bearish one down, correction, and then the next one, it'll be real choppy down, kind of like it was here. Actually, this first leg was real strong, and then there was a second leg in this next move. See the correction there, and that's where I started at the highest point. And there's no real way to teach this. It's just a skill, and as you do this longer and get more experience, you'll get better at it. If you have the manual, read it. It tells you how to do it. But a lot of it's just time and experience and sitting at the screen. I mean, we're not pattern traders. We're not looking to trade patterns. We're chart readers. So you'll find the same patterns all over the chart. So you have to be able to know when the pattern's telling you it's a good time to go to enter and when it's not. And you can only do that through chart reading skills. And it takes time and hard work. It's a skill. Like any skill, you got to work at it, practice, hard work, repetition, more practice, and just time at the screen, doing it every day, and then studying after the fact. Your goal should be able to easily, at the end of the day, see all this stuff. Most of you that are new, you can't even see this at the end of the day. It's just like gibberish to you. But when you can easily spot all this stuff at the end of the day after the fact, and you keep studying your charts and working on it, eventually you'll start to see it a little bit in real time. First, you might notice where this new leg starts, and you say, okay, yeah, I figured that out today. And then the next day you might, and slowly and surely you'll start adding this stuff, and you'll start seeing the second entry in real time. You'll start finding the trend lines in real time, and you'll get better at it. Will it happen overnight? No. It's anything that's skill that pays as well as this does, you're going to have to be able to beat the professionals. This is a zero-sum game. Listen to this if you don't listen to anything I tell you. Trading futures is a zero-sum game. In order for you to make money, somebody has to lose money. The professionals are good at this. They can read this chart. They understand price movements. They know what prices are likely to do. They're hard to beat. In order for you to take their money so that they don't take your money, you've got to be as good or better than them. If you get in here and try to trade and you're not as good or better than them, yeah, you might win a few here and there, but eventually they're going to take your money. You're going to be a donator. You're a donator to the cause. They need new donators every day. So they love new people to come in thinking that they can come in here and start trading live with them, and all they do is take their money. And the more money you got, the more money they'll take from you. So don't trade live until you prove you can do this on the simulator. And even then, you probably can't do it live. You'll have to ease into it. But I will say this, if you can get on the simulator and you can trade, follow the rules and do what we do and trade every day and make money every day using live data that comes, the same live data that they use with live trading, then there's no reason you can't do it other than between your ears. You just have to get right mentally. And it's just as hard to get the mental part down as it is to get the learning the strategy down and learn how to read this chart. But we get people all the time that learn how to read the chart and get the strategy down, and they can make money hand over fist trading the simulator. But as soon as they put their real money on the line, they start getting more conservative, or they start getting looser with their thoughts, and it just messes with them mentally, and they just fall all to pieces. So you have to ease into this thing slowly but surely. But the start is to be able to do it on the simulator. Until you can prove every day you can make money on the simulator, don't even waste your time trying to trade live, because you're just going to be a donator to the cause. Don't be a donator unless you just like giving your money away. And trust me, I don't care how smart you are. I don't care if your IQ's the highest in the world. I don't care how much education you got. I don't care how much anything about how you're. It doesn't matter. You won't beat these guys. You can't beat them, because it's like trying to go play in the. It's like sitting in the stands during the World Series in the ninth inning, and the losing team's at bat with 2 outs, and they need one more hit to get a tie and run in, and calling you out of the stands to come down to get that hit. What are the odds you're going to get that hit? Probably 0%, because you haven't practiced against those pitchers, and they're good, and you can't beat them. Even the professionals can't hardly hit them, but 2 or 3 times out of 10 if they're lucky. And so there's no way you're going to come down out of the stands and get that hit. However, if you start going to practice every day and taking batting practice against them and getting coaching tips and learning how to see the pitches and how to hit the pitches and what to expect, and just getting comfortable with it, eventually, yeah, you might walk in there and get that hit. But you're not going to come down out of the stands and trying to sit down at a screen and start trading against professionals is no different than that. You're not going to beat them. Yeah, you might get lucky once or twice, but trust me, before the end of the day or before the end of the week, they're going to get all that money that you thought you took, plus the rest of your money, or a large portion of it. And that's what happens. And so don't try to trade live. But anyway, we haven't even got to the trades, but you can see the down day. And yeah, it looks like it might be a range. And people start trying to buy this. Look, when you're making lower highs and lower lows, and it just because it bounces down here, be very wary. I don't see anywhere down here where there's anything consistent, but somebody sent me their chart, and they bought something down here somewhere. Maybe it was right here. I mean, or maybe it was this one. Is there a bar? Yeah, maybe it was this one. Because you could argue right there that there's a triple test. Yeah, you could argue there's a triple test, but that don't mean you buy here. If you did buy here, it would have worked, so that couldn't have been it. If you'd have bought this one, it would have worked. I think it was somewhere in here, and maybe they called this a triple test, and they wonder why this didn't work. But by this time, you can clearly see we're not bouncing out of here. We're making lower highs and lower lows, and there's a good chance this will fail right here. So don't try to buy here. We're looking for a measured leg down. Wait till when it's like this. Just wait. I mean, even if you'd have bought that one, it would have worked for a scalp. So maybe there was a different day they were looking at. But somebody sent me a chart that looked just like this, and I thought it was today's chart. And they bought somewhere along here on a triple test, but every one of these I see would have worked. I mean, I could see why somebody would say, okay, there's a triple test because we do have a break and a new low and all that, and that's a very nice bar way away, but it worked. Here's one. You would have got your scalp, unless they're trying to get more than a scalp out of it. I don't think it was right in here, but even if you bought in there, it worked. So I'm not sure. Maybe it was a different day, but it looked just like today, and I just assumed it was today. So if that trader remembers sending me that email, just make sure you understand that just because it's bouncing across here, you need to know that you've got consistent bounces. And one that happened at 5:56 this morning and then doesn't happen again till 11 o'clock, that's a little questionable to begin with, because that's a lot of space in there. But so I would look for more like 10, 11, and 11:44 here. But by that time, you can clearly see we're still trending lower here, and you're taking a chance going along right there. So just be real careful with that. But even if you did, you clearly get a scalp out of it. So unless you're trying to get a swing trade out of it, which you never try to do, we're always trying to do a scalp and run. But you can clearly see there's 3.25 points. So your scalp, even if you went for a 2-point scalp, it works. Every one of these works. A couple of them you would have got a nice runner. This you would have got a nice runner out of that. But just be careful with these. So just because it looks like a range, you know, if you're just seeing a triple test, you can't just take it because it's a triple test. You need to understand what's going on here. And if you can't see these lower highs and lower lows coming down, and then you don't know what to look for. So you're not qualified to take a triple test. So just make sure the trades you take, it's not just a pattern. You got to know what the chart's telling you. But we're really dragging. We're 15 minutes here and I hadn't even got into the trades. This is important stuff. So pay attention to it. But early on, we had the trend coming down. Notice the break. Two clear legs down to a new low. There's a two-legged correction in the middle of that. And then we run up here and you get a first entry, shoots through the MA, pulls back and get a second entry. So if it breaks above there, it's a failure. That's a reversal failure. We're looking for a reversal. You're trying to pick a bottom. These are very, very, I'm trying to think of the right word here. You need to be very advanced at chart reading. Most of you are nowhere close to wanting to trade these. And people send me emails, ask me about them, and all you're going to do is confuse yourself. Forget about failures. There's plenty of easy trades in here to take without taking failures. Yeah, there's some good failures and good reversals in here. But most of you are just going to lose money trying to trade them. And that's why I don't teach them early on, because they confuse people. You need to know what you're doing. And you need a couple of years of chart reading experience at a minimum to trade failures. And that's why I don't teach them. But some of the people that have been with me 4 and 5 and 6 years or longer here, so I talk about them. But it doesn't mean everybody should be trading them. I don't care how good they look to you. Don't try to trade them, because trust me, all you'll be doing is chasing your tail. Let them come to you organically, where one day the light goes, you'll, oh, I see that real clearly now. It makes perfect sense. And then you can trade them. But if you try to learn them as you're trying to learn second entries, you're going to be so turned upside down and so confused, you're just never going to make it. So when I tell you that, trust me on it. But anyway, that's a perfect reversal right there. And it was a quick, easy scalp. You didn't get a runner. Sometimes you'll catch the bottom and you'll get a runner. And then we just kept chopping higher here. Then we're going sideways. If you got a good signal bar here, maybe you buy off this bounce, but I don't like that signal bar. But it runs up, and you get another first entry, and then a second entry, and then it turns up. So there's another failure right there, right off the key entry point with a nice signal bar. It's actually an engulfing bar. Well, actually it's not, because it doesn't break above there. It actually breaks lower first and turns up. If it breaks above there, it's probably going higher right off that key entry point. And look at it go. That would have been a great entry. We come back here, we get a break. No setup there. Runs up to a new high, and then we reverse. Perfect price action there, really. This is close to being a reversal, but it's on the wrong side of the EMA. It's right into the trend line, which you could get another leg up like this. It already looks like a couple of legs up, but sometimes you'll get another leg similar to this one. So it's just too dangerous. And then you really don't get much else here. This was technically a lower high. This is technically a double top, and you get a little breakout pull back short with the trend. If you got enough room between here and this low, maybe you take that. I'm not crazy about it. Then you come down, make another new low, run up. First entry, second entry. So there's another failure, but this one's not off the EMA, but it is off the key entry point. You've already got a new low in place, but a lot of times you'll get 2 legs down, and so you might get another big move equal to the first 2 swings right there. And this is probably going to trap some people trying to pick lows, and maybe this is where they saw the triple test. If you drew a line across there, that would be a triple test, but this is not a range. So you're not looking for a triple test there. So that's what I mean by understanding the context of the chart. We're in a downtrend, so don't try buying this. Try to go short. And so there's a failure. It is right off the key entry point. And you can see how many times we tried to go higher right there and failed. So that's probably going to trap some people trying to pick a triple bottom or trying to just pick a bottom. And we've already had a break and a new low in place, so they're trying to get in early, and that's going to trap them, and I like that trade. It's a little aggressive. You need to know what you're doing. It's a little more experienced. So if you're not real experienced, don't take that trade. Runs down, makes a new low, and it bounces where I drew that line earlier. And you come out of there, you get a first entry short, you try to go higher, and you get a second entry short, and it fails, and that is an engulfing bar. I don't think I would trade that on the engulfing bar, but it's also a second entry, so maybe you do, but I'd probably wait for it to close, and then you probably say, okay, on the second entry, it's a little close, but it's also a failure, so it's going to trap people, and look at it go. So this is, again, is a reversal off this channel. It's not a major reversal, but I'd call that a reversal. And there's a difference between a failure and a reversal. This would be a failure with a continuation pattern. This is a reversal because you're reversing off of this pattern. And now you're working long. So you come back, you just get a first entry there. It does confirm that trend line, but you might could look at that as a failed breakout there. I didn't bark this one. I looked at it and thought about it. And I'll point it out here because some of you may not can see it, but that's clearly congestion or a little range, and you get a failed breakout, and that clearly breaks out right off the trend line. So maybe you take that trade as a failed breakout. There's plenty of room back, so in that case, maybe you take it, but you need to be able to see that and understand that. And it takes off, and you actually get an overshoot here, and then you get a second entry short. And the only reason I like that one is because of the overshoot and the fact it's a second entry short that far away from the EMA. And we might reverse and start that second leg down here, which we do. Although it doesn't take off like this one, we still start the second leg down from right there, just like I was hoping. But it doesn't turn out to be real steep, and you probably wouldn't have got I mean, you get a runner here probably, but you may not have got one that you can ride the whole thing down like that because it kind of chops sideways. But you can clearly see the EMA is still pointing down here the whole way. So I like that trade right there. And then you can see we do continue lower, and we come back up. We get a first entry. We try to go higher again there, and you get another second entry short. And I was hoping it would continue on, but you might still get a runner out of this one. I think you'd have got stopped out right here, depending on how you entered it, but most likely you get stopped out of that one. And it continues on lower, but I don't see any more shorts there. I'd really want to risk. And then it bounces down here, and somebody probably say, well, yeah, that looks like a triple test, and maybe this is still going to be a range day. It's possible, because this is really played out, although it's possible too there's another, you could almost argue there's another range here, or I'm sorry, another channel here. There I go, calling something the wrong name. I do that sometimes, and it's just out of habit. So, and you can see that clearly could be considered confirming that trend line. And so, and if you did consider that, you might even look at that as a first entry, second entry. So that could be a failure with a continuation pattern. It doesn't break lower after 2 bars, then I would skip it. So it doesn't matter anyway, but then you get the break, and you could almost argue that looks more sideways than a triple test or anything. So again, I don't like that, but you get the break, a couple of legs down, and it bounces. And so maybe you buy this. I didn't mark it. It's a little, I mean, yeah, it's a triple test, but it's been a lot of space in there. I mean, this was at 7:30 this morning, 9:30, maybe. But you don't have a break of this yet, and so that makes this risky, because it could break higher and keep going down inside the midline there. But maybe you buy that one. Would have been a nice trade if you did. But it runs up, you get a close outside and a failed breakout to a new high. Plenty of room back to the EMA. I like that one. You're expecting prices to at least make a new low here, even if it's just for this yellow channel. And this thing takes off. This is all too choppy here. And then now you don't want to go short down here. I definitely, there's another trend here. I think it's more like this right here. But generally, on the retest, I don't draw this, and that's why I didn't draw it. I just want to show it to you. But we drop down, and then we're just kind of chopping along, and it drops again, but you can't go short there. And you don't want to go short into this, and it fails. There is a reversal here. It's a little sideways with a good bit of resistance across there. But you might go long above that bar. It's another one that if you recognize what's going on, maybe you buy that. The problem is you may have this bigger blue, light blue trend here, and it needs confirming, so you don't quite know yet. It could be a range day, so maybe you buy that, but that really looks congested right there. But that's a first entry, second entry, and that is at a major kind of support area that could be a range. And it's a little early, and we are making lower highs and lower lows, but maybe you risk that one. Confirms the trend line here, tries to go higher once, tries to go higher twice, and long way back to the EMA. I like that one. And if you look here closely, it actually breaks higher 1, 2, 3 times. So this would really be the fourth time we came back and tested that trend line. And you'd probably say, okay, we tested it twice here. Why didn't you go short there? Well, you could, but at that point it really looks like congestion, and that's the first close outside with only one attempt to go higher. You want to see it go higher twice and fail, and so that's why I like going short here, because it may try to go higher a couple of times to try to make that new high on this is a really strong, lots of momentum move up. And so prices might fail a couple of times there. So you want to see it at least double test it. And this is the first close outside. So that's the first attempt to go higher, a second attempt. Now maybe you go short. And you can clearly see that trend line in play. So maybe you take that one, but I'd wait on at least for two tests, and then boom, nice move down. And it runs down here and it's finding support. It does fail, but you can still see it's just kind of, I don't see any reason to go long or short there. You don't know what prices are going to do here. And then finally they go on short, but again, I just don't see anything there I really like. It's just too much congestion and sideways stuff. You can clearly see this. And the only breakout's not a good enough signal bar. Then it drops lower and bounces, and it looks like we kind of get a little overshoot here. Maybe not. It's hard to tell. It's not much of one if it is, but it kind of looks like it. And notice there's clearly two legs up. I'm a little leery of this one because we just came off the low, so we're likely going back to the high. But look how many times we were underneath there. This is a second entry. We did get a break of this. Let's give this a color just so it's, I'll just give it green since it's going up. And you can see we got a break and new high and right at the midline, and we're a little ways away from the EMA. Maybe you go short there. It's a little aggressive, but it's one you might take. And then we're just chopping down and we're right back at that line, and you can kind of see prices want to go lower, but people are buying it down, and we've met both our measured moves now, and then suddenly it rallies out of there into 2 o'clock. So I don't see anything here worth. I think the reason we overshot this trend channel line is because prices were trying to make these measured moves, and you can see that's about where we got to before it rallied. We ended up going a little bit lower again, but then it rallied again. We were just playing the low of the range again here is what it really, or not the range, the channel. Off it goes. So yeah, it's a little hard to know what prices are doing down here. They're probably going for the measured move, but you want a perfect setup here, and none of these are perfect setups to go short. This was a second entry at the midline, which is a minor key entry point, and you do have a break in new high, so maybe you go short there at that far away from the EMA. Nice bearish bar too. So anyway, there it is. We got 30 minutes worth. I'm going to wrap this one up. I did a lot of talking today, but hopefully you learned something, and hopefully you know to leave reversals and failures alone for now if you're not super experienced at chart reading. It's just, you're just going to chop yourself to pieces and you're going to be frustrated. The idea is to make money, not take trades. Stick to the sure things, the easy to spot second entries at the key entry point. When prices bounce consistently at the same place on a range every day, it's hard to know this is a range because after we bounce off here each time, we're making a lower high. That's not a good sign. We should eventually go back to if you're consistently bouncing off the low, then off the high, then off the low, then off the high, then off the low, then off the high, then sell the high and buy the low when you get a good setup on it. But that's not what's happening here. Notice every time we bounce, even though we're bouncing down here, we're making a lower high, and here we make a lower low, a lower high, another lower low, and then lower low, lower high. We're going down. So you don't want to see that when you're bouncing consistently here. Most of the time you want to see it eventually going back higher, or maybe it's off the midline consistently. Here we're making a lower high every time. So you're losing momentum to the upside and you're gaining momentum to the downside. You got to be able to recognize that. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.